So I'm Niall Barton. I'm the chairman of Insurtech UK. And today we have as our guest Justin Balcombe, who's a partner of Oliver Wyman, who has a keen interest in Insurtech anyway, and has done really since the start. So it's a great privilege to have you here today. And so Justin, just tell us a little bit about you, and then maybe tell us a bit about Oliver Wyman and their interest in this sector.
Well, thank you for having me today, Niall. It's a great pleasure being here as well. From my perspective, I've been in the insurance industry just over 30 years now, and during that period, I've had the pleasure of being right the way through the industry, from start in claims to here we are today, talking about Insurtech and really the change that is happening right across the value chain. For Oliver Wyman, it's a really exciting time as we see huge amounts of opportunity with our clients and also leveraging the relationship that we have with Marsh McLennan, who is our parent company, so that we're able to bring together all of the capabilities that exist across the whole sort of MMC family and really position that quite exceptionally with the Insurtech community, the insurers, the whole value chain, and leverage all of the knowledge that's been gleaned over the years from the different parts of that MMC family. So it's a great time to be working with Insurtech UK.
Great. Well, thank you. I mean, you have a sort of unique vantage point because of that.
So whereas there's fewer incumbents coming in to the Insurtech environment, we're seeing more we're starting to see consolidation now around the activities that really are making a difference in the insurance company's value chain. And what I mean by that is, whereas before there was a sort of rush for gold, everyone wanted to have a piece of the activity in that value chain, whether it was in sales and distribution or right at the other end in reinsurance and subrogation and recoveries and claims. Now we're starting to see more and more focus around the parts that matter and the parts that can make a difference. And whereas before, over the last few years, there were lots of disruption happening at sort of subsector levels. So you could break claims down into everything from FNOL through to recovery, if you like, because the piecemeal process is interesting, but it's not the value driver. It's helping insurers reimagine some elements of it, but it's not fundamentally moving the dial. So when you take that view now, as the markets realise that yes, Insurtech has actually has made a difference, but it hasn't moved the dial. The question now is, how do you move that dial, and how do you move to profitable growth, which is ultimately what all parties want. Not suddenly insurer will switch off and become a digital business, but it will look at and is looking at all of those businesses that are out there that are disrupting those small segments and saying, okay, could we buy and host and add on, or do we build and partner, but ultimately, how do we accelerate? And therefore, I think 2020 is going to be the year where we start to see insurers recognise that A, they are not moving fast enough, B, there's a lot of very good content out there that they can acquire and start to bring in and add on to their platforms, and C, as they seek to move to digital, the ability to bring those, let's call them applications, in and hang them off their own platforms will help lower their costs of operations. And ultimately, we will see combined ratio reduce, which is the end game for the insurers. So when you look back, you're typically looking at an industry that by and large has been trading off a combined ratio of north of 100. Most will probably say absolutely not, but the reality is pretty much so. And as we move forward with the help of insurtechs and startups and reimagining that end-to-end journey, I think we'll start to see combined ratios heading down to low ends of 90s and hopefully into the top end of 80s for certain segments, for certain lines of business, which will have a marvellous effect on the whole sort of cost environment for insurers and really start to change the game. And the strong ones will be acquired because the value will be in the application that they're developing and the knowledge that they've developed that will allow the insurer to accelerate their objectives. Because if you really look at the incumbents that are in the market, none of them have really fallen by the wayside, even though they won't. But you know, if you wind back, everyone, it's the end of insurance. But it's absolutely not. What's happened is it's the start of the reimagining of the incumbents, and the legacy businesses are moving from a legacy state to a future state, and that future state is a very exciting journey with Insurtech plugged into it.
I mean, they're catalysts for the change. They're not actually a whole new vehicle.
No, that's right. So it is harder to attract investment, and it's more important than ever for the Insurtechs to articulate where they're going to get that value and how they're going to deliver that return on investment. And value being derived in a number of areas. Not just, I'm going to put my money in and I'd like a return on investment of 12% because I'm not getting it from the equities market. Not really. What we're seeing now is a combination of give me a return on investment that shows that there's longevity in my investment. So maybe I'm putting skin in the game for a longer term return, or I'm adding value on a multiplier effect because my platform actually can deliver volume over that platform more than it does today. And let's say I plug into an incumbent and I start to move to a repeatable type model, a click per share type model, a transaction-based model, and therefore the investors can see the multiplier effect. And there are still those investors that see that they can start bringing some of their portfolio together, and I think we're going to see some consolidation there as well, definitely. Where they've made bets in the past and then they've realised actually we can start to see synergies between our acquisitions, and therefore we'll start to see some consolidation there.
Gotcha.
When I look at UK, I think UK has been far more dynamic than the US, and whilst the US from a PE volume perspective is still huge, significantly more than the UK, the reality is that the UK has been undertaking more transaction, not transaction value. Transaction value is not higher, but our volume has been larger in the UK and in and around Europe than US has in its entirety. And whilst there's some real extraordinary valuations being put on the table for insurtechs and fintechs in the US market, and indeed to a lesser extent in the UK, we're still seeing more interest per activity in the UK market than we are in the US market. And that's quite extraordinary because, given scale, you'd think it was the reverse. But the reality is we've got a much more robust operating environment here. We've got some interesting tax incentives as well.
Good regulatory environment.
Very good regulatory environment where you're not, multi-state, which is one of the challenges for Insurtech in the US is, multiple jurisdictions, multiple regulators, and a whole set of challenges attached to that. We'd rather that you're building the next generation Mini and sell it to many people, because ultimately the focus is on three things. The focus is on the quality, and whether it's the book of business for an insurer or the level of integrity in the application or the Insurtech. The reality is it's on the quality. So everybody's looking for the best book of business, the best opportunity that's out there. The focus is on quality. The second is the return on investment. So as I talked about before, not when do I get my money back, but when am I actually going to see value? And the third is, for insurers, really on those profit pools. So, but more importantly, on the data that sits behind them. So I really need to understand my customer, and whether that customer is personal lines or increasingly now commercial lines, where the money's heading. Interestingly, it's all about understanding what's going on behind the clients, and then the race for data is just phenomenal. So whoever owns that end piece of data is where one needs to be focused.
Okay.